I think the mini is pretty interesting here. Big gap up, so big up, big down, or excuse me, big down, big up. Trading range likely. Plus, we're back in yesterday's or Friday's tight trading range. But whenever you get a big gap up, especially when it's a reversal like this, the odds are that if you're going to have a trend day, it's going to be up. Whenever you have a big gap up, the odds of a trend day are greater. It can be a bear trend day. You get a double top, break below the neckline, measure move down. But more likely, we're going to have an early trading range because we have big down, big up, big confusion. Usually means a trading range. We're at resistance, 60-minute moving average, and we're back in yesterday's tight trading range. I have some laryngitis, that's why my voice sounds like this. I want to turn the screen off for a minute to show something that I think is interesting. There's a trend resumption down slide that I've shown many times over the years. And it illustrates a few points, but there's one I want to make in particular. Okay, this is New Year's Eve, 2009. Bear, sell off, tight trading range, bear trend. This is last Friday, which is the last trading day of 2017. Sell off, tight trading range, bear trend. Okay, very similar. So this is 2009. This is Friday. Huge late sell-off. Huge late sell-off. But I don't show on this chart, and I'll add it. What I don't show on this chart, and I'll add it today, is what took place over the next 2 weeks. This is that day, New Year's Eve 2009, Big Bear Day. That's this day, Big Bear Day. Trend resumption down on New Year's Eve. Trend resumption down on New Year's Eve, and then the market rallied for the next 6 days and went sideways and then sold off for 10% here. I'm just bringing this up because the market tends to do similar things, and the circumstances here are similar. We rallied to we had a huge bull trend, and then we had that New Year's Eve day. We got a rally for a week or two, and then a 10% correction. And since the daily, weekly, and monthly charts are so extremely overbought, the odds are we're going to get at least a 3 to 5% correction starting sometime in the next couple of months. If we rally for a couple of weeks, go sideways, and that's what happened back in 2009. Big gap up increases the chances of a trend day. Trend day can be up or down. We're still in yesterday's tight range, so as bearish as this bar is, it's probably not going to lead to a huge bear trend. It might. It's reasonable to sell here. I would not. We're at the bottom of a tight trading range, and it's more likely a pullback from this gap up. We're also at the 60-minute moving average, which is a magnet. I posted this morning that I thought we were probably going to go sideways on the open, for an hour or two, because we were going to gap up into yesterday's tight range and at a magnet, 60-minute moving average. Magnet means the market gets drawn to it and it has a hard time getting away from it. And with such a big reversal, the odds of an immediate sell-off are small. The best the bears probably can get is some kind of a pullback, maybe a 50% pullback. I think probably not, but maybe. That would be down here, testing the low of 2 weeks ago on the weekly chart. For the bears, low probability sell. One of the problems the bears have is at the bottom of Friday's range, so low probability sell, and the bar is big, so the risk is big. So the bears selling here are taking a trade that has bad risk reward and bad probability. That means it's probably better to do the opposite, and that means the market, there are probably more buyers below 1 than sellers. Enough of a bounce for bull scalpers to take a profit. Bulls want an early low of the day. I think we're always in long simply because of the size of the reversal. Even though only one bull or two small bull bodies in the past 10 bars, very strong reversal. For the bulls, buying above 2, opening reversal. They'll pull back to support the bottom of yesterday's range. But they have the same problem that the bears have, selling below 1. The bar is big, so the risk is big, and the probability is small because it's in a tight trading range. And that's why I think we're probably going to have a trading range open. Always in long, because we're in yesterday's tight trading range. We may go sideways for an hour or two, and the bulls might need a double bottom with a 2 low, or possibly even a wedge bull flag or a triangle. But sideways to up is more likely than down today. And even if we sell off back down here, the odds are there'll be buyers there after such a big reversal. That means the chance of a bear trend day right now is small. Probably buyers below 1. The bears micro double top with 1. Probably buyers below 3. For the bears micro double top with 1, but strong enough reversal and strong enough bar 1. So that is a low probability short. Limit order bulls, placed a limit order to buy. 1 point below 3. Most of them did not get filled. Bears have a double top, but a bad sell signal bar, bar 3, and a very big bull bar, bar 2, and a very big gap up. And therefore, the reversal here is probably minor. That means the best the bears probably get is a trading range, although it could test back down to the low from 2 weeks ago and a 50% retracement of the gap up. Always in long, I still think. The market's deciding how far down it has to pull back. This is a realistic outer limit of where it will pull back. Right now, it's probably a limit order market. They bought below a big bear bar. They sold above a big bull bar. And they scalped. Double top for the bears. Bulls want a double bottom. It's possible that one will remain the high of the day. Maybe 25% chance. There's probably a 25% chance, maybe 30% chance. Two will remain the low of the day. And with these limit order markets, the market usually tries to get both a double top and a double bottom. So double top and double bottom. We may stay sideways for an hour or more because we're back in this tight range. But right now, it's more bullish than bearish. Location is important. If this was up here above the tight range, traders would be more eager to buy above 2 or above 5. Likewise, if it was down here. But because we're in the middle of the tight range, a lot of traders want to buy reversals up from the bottom, not the middle. And the bears had a second entry short below 3, which is good, but a bad sell signal bar after a very good buy signal bar. So a lot of bears will not take that short. If 5 has a 2 or 3 tick tail on top, a lot of the bulls will not buy, they'll wait. Always in long, a second entry buy, but pretty big tail and the top of a tight trading range. So a lot of traders will not take that buy if they'll wait for either maybe a high 2 or a wedge bull flag or for a strong breakout and then buy. Very good bar for the bulls, especially if it closes up here. Bulls want a breakout and a measurement up, and the bears want a low 2 tail breakout. Below 1, below 3, and then low 2, below 7. Now probably 70% chance we've seen the low of the day, maybe 60 or 70% chance. Well, the bears, most bears are not going to short below 7. If it's a big bear reversal bar, they will, but that's not likely. Friday was a very big day. That increases the chances that today will be an inside day. In other words, rally up near yesterday's high, Friday's high, but fail to get above it. Sometimes you get a doji day where the low of the day to the open of the day projects up, and that measured move is often the high of the day. Bulls need consecutive strong bull bars. Did not get it above 2 and might not get it here. And if they do not get it, then a lot of bulls will look to buy pullbacks instead of closes. Still always in long since the open. but not as strongly bullish as it could be. Bar 1 was a warning that today may not be a strong bull trend day, and instead it could be a weak bull trend day or a trading range day. Stop for the bulls below 5, which is far. So if anybody is long or buying, they have to trade smaller. Bears probably will need at least a micro double top. As far as shorting above 7 with a big tail, I would not. We're fairly close to the measured move target. A more important target is Friday's high, and then the all-time high, which I think we're going to go above it this week. Who's going to sell below 9? Nobody. Suppose it's a great-looking bear bar closing on its low. Nobody's going to sell. It might make the bulls wait for a couple legs sideways to down to buy, but the math is not good for the bears. We're always in long. We have a reversal up on 2, a pullback on 5, a buy the close rally here. The bears probably need at least a micro double top or 3 or 4 consecutive bear bars. So the bears have failed breakout. Different ways to draw a wedge or low probability short there or here. 60-minute chart, the bears see this as a bear channel, getting lower highs, lower lows. But low probability short. However, that's actually decent for the bears. They might sell above 9. I still think it's by the close, even with the bar at 9 close. You can see 10 opened above the 9 close. That tells you that a lot of bulls were so eager to buy, they just hit buy the market as soon as they saw the first bear close. Not a good looking buy above 9, but I would not take the sell. We have a tail on 7 and then a bear bar on 9, so we may start to go sideways a little bit here. You can see the unwillingness of buyers to buy above 9, a bear bar closing on its low, and then a possible micro double top with the 7 high. So it looks like we're going to get a pullback starting probably within the next few bars. It's still buy the close, buy for any reason. But tail here, bear bar here, tail here. We may start to pull back a little bit. Right now, 70% chance we're not going to fall below the 5 low for the remainder of the day. You can see there's something wrong with the rally. Tail 7, bear bar 9, tail 10. Still always in long. Still probably a bull trend day, maybe a trading range day. The bears hope for a parabolic wedge top and an early high of the day. Limit order bears might be selling 9 high. Stop order bears, I would not sell at the stop. If we start to get 3 or 4 bear bars, and then maybe sell closes or sell above bars. Bears want a parabolic wedge. At the measured move target, you can see some profit taking there. So some bears sold the close of 12, betting that the follow through would be bad enough to make at least a scalp. Still, the bears are still trying to get a parabolic wedge. If we stall here, the day could end up being a trading range day and oscillate around the open of the day. I still think we have a lot of bull bars, and the context is good for the bulls, a huge reversal. So I think even if it's a trading range day, it'll probably have a bullish bias and tend to be tilted up. Bar 12, the end of the first hour. Big reversal, big down, big up. And the bull body is above the bear body. That's a pretty strong reversal. Tight trading range makes it less important. But whenever you have a big bear body and then a big bull body, and the bull body is completely above, that is a sign of very aggressive bulls. On the daily chart, it can lead to very big reversals. This is almost like that. Got some follow through. The same thing here. Bull bar above bear bars led to a big rally. Bull bar above a bear bar. So big bear breakout, and the bull reversal was so big, the bull body was completely above the bear bar, led to a big reversal up. Context is different here. This is near the top of a tight range, so less likely to lead to a huge reversal up. 60-minute chart. To me, it looks like we're going to pull back. It's by the close 6, 7, 8, 9, and then it looks like we're channeling up. So traders would rather buy pullbacks at this point. And aggressive bears, they can sell, but I think it's too early. Small pullback bull trend, very difficult for bears to make money. It's usually better to wait to sell until you see bears making money. Now, if we have a parabolic wedge, why would anyone buy here? They're taking a chance. They think either the market's going to keep going up in a tight bull channel and they'll make money, or because the channel is tight, the first reversal down will be minor and form a trading range. If they buy here, they can buy more lower and then get out when it gets back up here again. Friday, a big day. We opened in the middle third. Increases the chances today will be an inside day, which means gets near Friday's high and reverses down and forms the high of the day. It also increases the chances that if we reverse Friday completely and go above its high, that we do not get very far above its high. Therefore, we're probably not going much higher today if we go higher. We'll probably top out around where we are or not far above Friday's high. Surprise bar usually results in a couple legs sideways to down, but still always in long despite the parabolic wedge. The close of bar 14 is important. If it closes on its low, it increases the chances that we'll have a swing down, for an hour or more. If it closes, 4 or 5, 6 ticks above the low, increases the chances we're going to go sideways. Big bear bar and a bull trend. Market went mostly sideways. Big outside down bar became the high of the day. Surprise bar got at least a couple legs down and resulted in a trading range day. Same thing here. Big bear bar, surprise bar led to a swing down. Surprise bar sideways. Surprise bar after 20 bars up sideways. Surprise bar sideways to down. This is probably like today. Big tail, right? But are bulls buying the close? No. They're hoping 14 is simply a test of the one high. And it's simply a pullback, but it's a big enough down move so that it confuses traders. The result is more likely sideways here. Big up, big down, big confusion usually results in a trading range. So probably sellers above 15, buyers below, and sideways. If 15 closes on its high and has a 2 or 3 or 4 tick bull body, it's still an okay buy. We're still always in long. But if it has a 2 or 3 tick tail above, bears probably will start selling above. Still always in long. The probability for the bulls now is less. So a lot of bulls will not buy above 15. They'll wait for some kind of a micro double bottom. The bulls see 14 as a breakout test of the one high, and they want the bull trend to continue. But it was a sharp enough sell-off so that we're probably going to go sideways here. Bull II, always in long. But the math is difficult because where do you put your stop? Below 14, maybe below 5. So if you're taking a buy, you have to trade small. Otherwise, you wait to buy some kind of a double bottom down here, which I think is higher probability. And for the bears looking for a second leg down, we have a bull bar 16. A lot of bears are going to wait to sell. They'll wait for a bear bar. Also, small pullback bull. A lot of the bears do not want to sell this low from the high because of the big up, big down, big up. A lot of bulls want a second entry buy, like some kind of a double bottom, or if we start to get 3 or 4 bull bars, they'll go back to buying closes. I think difficult math here. So I think it's better to wait. Bears will probably wait for a micro double top to sell, and bulls will wait either for some kind of a double bottom to buy or for a bull breakout. 1 or 2 big bull bars or 4 or 5, 3, 4 or 5 small bull bars. Right now, more likely trading range since bar 9. Bulls trying to get their breakout. Always in long, more bullish than bearish, but not a very good buy. tight trading range and then top of a trading range since bar 8. I think, as I said, we're going to have a hard time getting much above yesterday's high. So I think the high of the day will be around yesterday's high, maybe a little bit above, a little bit below. For the bears, a lower high, but a tight range and a minor reversal. And for the bulls, a 5-tick trap above 15. So very difficult to do anything here. There'll be buyers probably around the 14 low and sellers around yesterday's high. And the odds of a big bull trend day are small. Probably a trading range day, and probably we're going to get back to the open of the day, which will be the middle of the day, and then the day will end up as a doji day on the daily chart. Tight trading range, a bad sell signal bar, 22, a bad buy signal bar, 23. Might form a triangle here. I said the bulls wanted to wait for a second entry buy. They'll try to get it with 24, but the range is so tight that it's probably more of a limit order market, not a good buy. Still always in long, still above the moving average. You can see the bears who sold these highs made 1 point, and the bulls who bought the 22 low or 1 point lower made 1 point. So limit order trading here. I think we're going to get down to the open of the day at some point today, either sometime soon or later. And I think if we do break above Friday's high, we're not going to go much above. So the high of the day might be here, might be a little bit up here. For the bulls, a 20 gap bar buy, double bottom 15, but more of a limit order market. So not a good buy, not a good sell. Most traders should be waiting. That's 3 bear bars, 4 bars down. Are we always in short yet? No, but I'm certainly not very bullish. I would be more bearish if 22 was a decent sell signal bar. But right now, trading range since bar 9, and we're getting near the bottom of the range. Again, testing open of the day and the top of yesterday's range again. But a lot of bulls are not going to buy unless we go sideways for a few bars. And a lot of bears do not want to sell this low in a trading range when the bear bars are not all that big. So best choice, wait. We're at the bottom of the range, so better to look to buy. But I think the bulls will wait for the market to go sideways a few bars before buying. We're in the buy zone, a 5-bar bear micro channel. So a lot of bulls will wait for a micro double bottom. And the bears who sold are scalping. They don't want to be selling this low when the sell-off is not strong. For the bulls, they're hoping it's 2 legs down and a triangle, 1 pullback 2, which it is. But stop placement is a little bit tricky. If they buy here, is their stop below 5 or below 14? They can always put it below 14, and then if it gets stopped out, buy again. But I think this is not a strong buy, and I also think it's too low to sell. If the market was clearly always in short, then I'd say sure, sell, but it's not. This looks like a trading range, and we're at the bottom of the range. That is a bad location to sell. Trading range, now getting into the top half, into the sell zone. Still always in long. I still think the market, if it gets above yesterday's high. It's not going to get much above yesterday's high. And I also think that we'll get down to the open of the day before the day is over, whether or not we go above yesterday's high first. Well, the bears will lower high, but I still think we're always in long. And I'd rather sell higher up. Might get a triangle, lower highs, lower lows. If we do, we're still always in long. The odds favor a bull breakout. Maybe we'll go for a measured move up. But as I said, I think we'll probably close around the middle of the day, and the day will probably end up being a doji day. Right now it's a bull trend day, but I think we'll close below this price and closer to the open. So traders are going to sell rallies and buy dips. A lot of traders want to buy a reversal up from around the open of the day or sell a reversal down from around yesterday's high. And that's why we're going sideways. It starts to go up, the bears start to sell, and the bulls stop buying. It starts to go down near the low. The bulls begin to buy, and the bears start to take profits. And the result is a tight range. The bulls see this as a double bottom, 14.28, and a breakout, 31, a pullback, 34. Still always in long, but the top of a 2-hour trading range, not a high probability buy. And the bears want a bear IOI and a lower high, and what they hope is a bear channel that will last the rest of the day. Bad math for bulls and bears. Probably not going to go very far up or down. Therefore, the reward is small. Middle of a tight trading range, so the probability for the bulls and bears is around 50%. So very difficult to structure a very good trade here. Better to buy down here and sell up here. Very tight range and a triangle, always in long. The odds still favor the bulls, but the more bars that get added to it, the closer it becomes to 50-50. Bulls will start trailing stops, use tighter stops above higher lows, like below 28. And if we go above 34, they'll raise their stop to below this low. Strong rally, gap up and rally, trading range. Friday we had a sell-off, trading range, trend resumption down. Now we have a gap up and rally, trading range. Odds are always better for trend resumption than trend reversal, but every bar that gets added to the range makes the probability closer to 50-50. So right now the odds still favor higher prices, but it's not like a 60% bet. So it's better than 50-50, and it gets closer and closer to 50-50 with every bar that gets added. Stop for the bulls now. Most bulls will have their stop below 42. Some will keep their stop below 5 or below 2, but I would rather get stopped out and re-enter again if it started to turn up again. No one wants to buy too high in the range, even though we're still always in long. Most of the bulls are scalping, but I still think it's on a swing buy. And for the bears, they want a double top 34 or double top 22 or some kind of a major trend reversal. Major trend reversals have a 40% chance of leading to a swing down, and that's when they look good. And right now, this is not looking like a particularly good one. The bears need a good sell signal bar at a minimum. 52 is closing on its low. That is a more reliable, a higher probability sell, but it's still a fairly tight bull channel here. And it's still more likely that the reversal is minor. Either the trading range continues or we keep working higher. It's an okay swing short, but low probability, higher probability to wait and to see 3 or 4 consecutive bear bars. It's getting late in the day, and the day is still a good shot at a doji day closing around the middle. Therefore, we still have a magnet at the open of the day, pulling the market back down. Still in the short below 52, but still always in long, so still more likely to go up to yesterday's high before going down to the open of the day, which is just above yesterday's high. But very little money to be made here until we get a chance to sell up here or buy down here. The math is not good enough for a scalp buy. We're at the top of a trading range, and buying with a stop at the top of a trading range is a low probability bet. For the lower high major trend reversal, bears selling below 56 is higher probability than 52. It's a second entry buy. It's a wedge with 1, 2, 3, a double top 22, but the probability is still not all that good. And for the bulls, the location is bad. Bull trend always in long. Bull bar closing above the moving average. About the top of a weak rally near the top of a trading range. Not high enough probability for a scalp. Okay swing, stop below 42, but it's really not a very good buy. The market's deciding, is it going to get to yesterday's high or down to the open of the day, yesterday's low? And we're right in the middle. So risk and reward about the same. Bears selling here, theoretically could put a stop up here or above here. Bulls buying here could put a stop here or down here. Probability about the same. The probability for the bears goes up with each bar. You know, the bulls are failing to get above yesterday's high, and therefore it increases the chances that we're going to go down to support, and obvious support on a day where there's a measured move from the low to the open up to the high. You got to be thinking that there's a magnet at the open. Look at the low and then the open. The high of the day is exactly at the measured move projection. That tells you that the open is an important price. We tested it here, but have not rallied much above it, and therefore it's still a magnet. And a lot of traders want to see the market get down to the open. Stop entries in a tight range, terrible math all through here. Because if you're scalping, you're going for 1 point, and your risk is probably 5 or 6 ticks. And that means your probability has to be 70%, 80% to make it worthwhile. And stop entries in a tight trading range are never 70 or 80%. So it's a bad stop entry market. It's a limit order market. And when the range is this tight, it's better to do nothing. The bears are still on their sell below 58, and the bulls are still on their buy for any reason. Stop for the bulls, any of the higher lows, 54, 40, 28. Late in the day, I think we're going lower. We may go higher first, but I think we're going to test the open of the day. I haven't taken a trade in any of the past 15 bars. The range is too tight, and we're at the top of a 4-hour trading range. Another sell signal, but really bad math for bulls and bears here. Risk is going to be pretty much 5 or 6 ticks for anything, buy or sell. And reward probably will be no more than 2 or 3 points. For the bears, a wedge, 1, 2, 3, or 1, 2, 3, and lower high major trend reversal. And for the bulls, a bull channel walking up the moving average. Everybody knows it's more bullish than bearish, but nobody wants to buy. The rally since bar 27, bar 26 is weak, and we're at the top of a 4-hour trading range. So not many traders willing to buy, and tight bull channel, not many traders willing to sell. So not much trading going on. On Friday, we had trend resumption down beginning on bar 72 around 12:30. That's a common time, 12:30, 12:35, for the market to begin a trend. We've been trending up all day, never became always in short, and the bulls are hoping to get above yesterday's high, Friday's high, and the bears want a bull trap like this and a reversal down. Holding above the moving average all day. If we're going to have a trend, up is more likely than down. Slowly getting pulled up to test this Friday's high. A lot of the bulls buying are hoping that we get a capitulation move, a parabolic second leg up. So leg 1, pull back, leg 2. They know the odds are against it, but the risk is not all that big. The market's deciding whether we're going to close near the open, which is becoming less likely, or near the high and create a 2-bar reversal down and up. I think we're probably going higher over the next few days. That's a pretty dramatic reversal. Usually it results in follow through. One of the problems with the bulls is, 1 bar like that, or like that, or even like that, could cost the bulls 5 or 6 ticks, and they know the profit potential is not all that good. They're hoping that we accelerate up, but that's probably not going to happen. So it makes it hard to do anything right here, buy or sell. The risk is big relative to the reward, and the probability is not as high as traders need to offset the risk. Parabolic rally, trying to get bigger bars. The bars are 2 or 3 ticks through here, and that usually does not lead to big reward. But if the bars start to get bigger, the market might go up 3 or 4 points. I am currently flat. I debated buying, looking for a test of yesterday's high, but when the bars are 2 or 3 ticks tall, I usually wait. Bears are hoping that this is a bull trap, but it's a small pullback bull, pretty much all the way up from 28, and usually it's not a profitable strategy to be selling with a stop in a small pullback bull unless you get a second entry, which this is the first entry. But you can see the problem that the bulls have. Can we get all the way back down to the open? I don't think that we will. The two targets are yesterday's high and the open of the day. But with a small pullback bull trend like this, the odds are against a big sell-off, more likely sideways, and more likely will close near the high of the day. And today will be more of a bull inside bar closing near its high than a doji bar closing near its middle. Still always in long, despite the bear bar closing on its low. But hard to stay long this late in the day when you have a failed breakout of the high of the day. Still always in long, but we're not going up very fast and we're running out of time. So not a great buy above 74. Like I said, selling below 73 was a mistake. Anyone who did that, it's a low probability sell. Small pullback bull trend, selling with a stop. It's a losing strategy. Testing yesterday's high. We've had three big reversals over the past couple of weeks. And Friday's high is the first of the three. And then we have the all-time high just above. I think we're going to a new all-time high. But I think we're probably not going a lot above the all-time high. Also, I don't know that I don't think we'll get there today. I think we'll get there sometime, probably this week, maybe tomorrow. For the bears, it's a second entry short, failed breakout of the early high of the day. And it's a failed breakout of yesterday's high, Friday's high. But it's still a small pullback bull trend, so not a good stop entry trade. I think I ended up not taking any trades here. The only trade that I would have considered was buying and taking a chance that we'd get trend resumption up. But I chose not to do it. My other chance was buying the 73 low, betting on a minor reversal, but I ended up not doing that. Sometimes you get a reversal set up at the end of the day like this, but unless you get a perfect sell signal bar in really good context, I would not take the trade. This is an example of the opposite. Not a good sell signal bar, 78, and not good context, a small pullback bull trend. However, bulls will take profits. They'll sell to take profits. Bears, I would not do anything. The one thing we knew today was we had that sell-off on Friday, trend resumption down, and a big gap up that reversed most of the selling. The odds were that today would either be a trading range day or a bull trend day. I mentioned that the first bar of the day was a very big bear bar. And for the bears, it's a short for a failed breakout above the top of yesterday's sell climax. But we're within a 4-hour, 5-hour tight trading range. Selling near the low is a low probability sell. And then when you have a big bar like bar 1, putting a stop above means the risk is great. So you have low probability and big risk. So bad risk reward, small, big risk, potentially big reward, but probably buyer somewhere not far below yesterday's trading range, 50% pullback. So bad risk reward and bad probability for stop entry bears selling below 1, and that tells you that there probably were going to be more buyers than sellers below 1. I thought the market was always in long, even at the close of bar 1, and then again above 2 and above 5, it confirmed the always in long. The bulls buying above 2 had a similar problem to the bears selling below 1. One difference is the market was always in long, and that made it better for the bulls. The bears had a second entry short below 3, but a doji bar, and following a very big bull bar and following a very big reversal up, still always in long. And then the bulls had a double bottom with 2 and 5. 5 was a pullback from the bar 2-3 reversal. Fairly prominent tail, lowered the probability, and was warning us that if we get a rally, it's probably not going to be a strong bull trend. However, we did get a swing up. And then on bar 9, we had a high one by 3 pretty good bull bars, probably buyers below 9, possibly sellers above. We have a tail on top of 7, bear bar on 9, but I still think it's better only to buy either below or above 9. And then 13, parabolic wedge, but a doji bar, it's a low probability short. The bar 14 was big, and had it closed on its low, then I thought the odds would be we would get a swing down. But because it closed in its middle, I thought we were going to go sideways. So big up, big down, big confusion, and sideways, which we got. Big enough bear bar probably would test its low, which we did 27. But that was it. We just stayed in a very tight range with lower highs, higher lows, a triangle. Weak bull breakout above 42. The bears repeatedly tried for a major trend reversal, lower high here, a couple entries for a lower high here, but tight trading range made the probability, I think, less than 40% that the bears would get a swing down. Better to wait to see if they start to break strongly to the downside and then sell. The bears could not get much below the moving average all day, and bulls kept buying reversals up. I think most of the bulls were buying at the market and with limit orders. Not a lot of stop order buying, even with decent buy setups, 54, could not go up very far. And then here, 68, 69, 70, it looked like we were going to get trend resumption up to yesterday's high. I said early on, when you get reversals like this, very big reversals, you often go above the top of the sell-off, but usually you do not get far above it on the reversal day. Today's the reversal day. And so I said early on, probably a trading range day or a weak bull trend day. And the target above was Friday's high. And if we got above it, we probably would not get far above it. Through here, the market was deciding whether it was going to test near the open and convert the day into a doji day, or test yesterday's high, Friday's high, and close near Friday's high, and have the day be a bull trend day, which is what it ended up being. The stop entries today, below 1, below 3, possible high of the day, but I think low probability. Above 2, above 5, higher probability, but it became high probability on the close of 6 or 7. Other stop entry trades, we were likely to get 2 legs sideways to down after 14. So buying above 16 was not great. Buying above 27 or 28, not great with a tight bear channel. Probably need a double bottom, which we got 42. So that would be the next good stop entry buy. Double bottom 46.54. Okay buy, but you had to wait a lot of bars to make money. Buying above 74, we're probably not going a lot higher. So if you buy it, you got to be pretty quick. Selling below 73. Small pullback bull trend since 48, since 25, since 40, since 26 or 27. Therefore, minor reversal and probably more buyers below 73 than sellers. Buy the close, sell the close. 8, probably buy the close. 9, 10, 11, yes, buy the close. And then that was it for buy the buyer, sell the close. Limit orders. Probably buyers below 1, but you needed a wide stop to do that. Sellers above 2, I think we was in long, I would not do it. Probably buyers below 3, but a wide stop below 2. And then probably buyers even below 13, but there was a parabolic wedge top, so not a great buy. Maybe sellers above 9, micro double tops 7, not great. And probably tight trading range in here with sellers above 16 and buyers below, and that's what it was all through here. The range became too tight, I think, to scalp in here. So if you're trading in here, you're either swinging a short or a wedge lower high, major trend reversal, 1, 2, 3, or swinging along for a channel up that could accelerate into the close and get above Friday's high, which is what happened. We're very close to the all-time high, so reasonable chance we'll get there tomorrow. But because if you read my weekend blog, the daily, weekly, and monthly charts have never been this overbought ever in the 95-year history of the S&P. And while they keep getting more and more overbought, I think the likelihood that this is going to continue much longer is not very big. I also showed that a day in 2009 that was very similar to this. It was New Year's Eve, and we had a sell-off and a trend resumption down. The next 6 days were bull days. Today's a bull day, so maybe we'll get a week or so of bull days, taking us to around January 19th or so. And then the market had a 10% correction. And the market tends to repeat things, and the likelihood of it following exactly what it did in early 2010 is small, but it's just something to keep in mind that after a New Year's Eve trend resumption down, the next 6 days were up, and today is an up day. Bears trying to get down to the open of the day, but they're probably not going to get there. They'll simply put a tail on top of the daily bar, making it a weaker bull bar. Okay, question. Do you often trade Tesla because due to the moment compared to price of the stock? I haven't taken a trade in Tesla in a while, but for day traders, it's a decent stock. Here's a 5-minute chart of Tesla. It has really good swings. But one problem for a lot of traders is the price. It's a $300 stock. So a lot of traders cannot trade that. However, you can see it trades really well. Any of the big stocks, Tesla, Netflix, Amazon, Google, Apple, financials, JP Morgan, Bank of America, oil, Exxon Mobil, Valero, there are probably 100 really decent stocks for day trading. And then there are always special situations coming up, like takeover talks. And so a stock that might be quiet for the past year all of a sudden starts to have big days. So lots of opportunity for stock day traders. Pretty good reversal at the end of the day, putting a tail on the top of the daily chart, making it weaker for the bulls, but I still think the odds favor the market going up. I do not think we're going to reach that line. Anything is possible, but I think that is unlikely. Different ways to draw the channel bottom using this low or that low. So, I think it's going to be interesting. I think regardless of what Congress does on the 19th with the vote on the budget, if they vote to keep the government open, which is what they'll probably do, the bulls, we might get a sharp rally for a day or two, but if we get it, I think the bulls will probably take profits because they know how overbought the daily, weekly, and monthly charts are. On the other hand, if they vote to shut the government down, the bulls will take profits because that's bearish news. And the bulls have incredibly big profits with stops very far below on the weekly chart. Where's your stop if you're a bull? all the way down here, that's more than 10% down. Nobody wants to risk that much. So traders who are trading the weekly chart will take fairly quick profits. Monthly chart, where's your stop? Down here. It's a 15-bar bull microchannel. This is theoretically where the stop is. Nobody's going to risk that much. And therefore, if it starts to go down, a lot of the bulls will quickly get out and not rely on their stop. Okay, nothing much to say. Very quiet day. Odds are we're going to make one more new high. And I think the market probably will be sideways to up into the January 19th vote. And I think, more better than 50-50 chance we'll start a pullback in January sometime this month. All right. Hope everybody has a good night.